Stocks, ETFs, derivatives, these words can sound confusing at first. Let's make them simple. A stock is a share of ownership in a company. So if you buy a stock, that means you own a part of the company. The chance and risk of a trade here is very high, because you set all on one card. An ETF, or exchange traded fund, is like a basket of many different stocks you can buy in one go. There are many ETFs with different topics. Most common is, for example, a MSCI World ETF, which includes around 1,500 companies in 23 different countries. If you invest in an ETF, you spread your risk. A derivative is a financial product, a contract whose value depends on something else, like a stock, currency, or commodity. This means you don't own the stock or ETF itself, you kind of bet on its development. Here is an example to make everything clear. Think of it like a pizza. A stock is one slice. An ETF is the whole pizza with different toppings, and a derivative is like betting on how the pizza will taste without actually eating it. 3 core building blocks every trader should know. Next up, why every trade shows 2 prices, the bid and the ask. Thanks for watching, and if you liked this video, subscribe for more trading basics.